Welcome everyone to our virtual panel, How Can Startups and Entrepreneurs Address Climate Change and Biodiversity? In the second day of our virtual summit, One Region, One Committed. I'm Carolina Lustosa, Investment Officer at IDB Lab, the innovation laboratory of the IDB Group, and it is my pleasure to be here and have the opportunity to discuss with our amazing panelists about real-world experiences of how the innovation ecosystem is promoting a sustainable and green recovery in the region. As you know, Latin America and the Caribbean seeks to achieve a sustainable, resilient, low-carbon growth that meets the targets set by the Sustainable Development Goals. And this requires a fundamental and structural transformation in the type of growth we follow in the next years. We will need all hands in order to achieve the targets that have been set. And we can only rise to the challenge if we are aligned and working together. And in this sense, the role of innovation and the private sector will be key if we are to achieve a sustainable and green recovery. From IDB Lab, we promote development through the private sector by identifying, supporting, testing, and piloting new solutions to development challenges. We have been pioneers in climate finance and early-stage financing for green business in areas such as climate-smart agriculture, sustainable tourism, clean energy, innovative water management systems, bioeconomy, nature-based solutions, circular economy, among many other areas. We have been supporting the innovation ecosystem and entrepreneurship in the region for over 2 decades now. And along these years, we have seen how, by leveraging the power of technology and new business models, the early-stage ecosystem can be a potent force in transforming the region's productive landscape in a way that not only increases productivity, creates jobs, and improves lives, but also builds natural capital, enhances sustainability, and helps to regenerate our region. We support the ecosystem by connecting players that are using or want to promote the use of technology to solve these challenges, by disseminating practical knowledge, and by offering a wide array of financing products that can be mixed and matched to better support these innovations, bridging key financing gaps for innovative startups and companies that drive inclusion and systemic change in the region. Now, more than ever, we will continue to support innovators and entrepreneurs in this space in alignment with IDB Group 2025 vision, of which climate change is one of the fundamental pillars. In this regard, a recent report, IDB Lab and Surfing Tsunamis, shows that sustained double-digit growth of venture capital in the region, reflecting the increasing and important role that entrepreneurs and startups are having in shaping the productive landscape for years to come. The report shows that while established and more traditional companies have lost billions of dollars in value over the past decade, young companies fluent in today's digital technologies have built over $500 million in value. And in many cases, these companies are led by founders motivated by the desire to preserve and regenerate our planet. Without further ado, I'm thrilled and honored to introduce our panel, where we will listen to amazing innovators that IDB Lab have supported and that in different ways are transforming this landscape, and who will tell us about their real-world experiences to promote a sustainable and green recovery in the region. We have the pleasure to have here with us Douglas Eager, CEO and founder of Intrinsic Value Exchange, Francisco Jardins, co-founder and managing partner of SP Ventures, Julia Santander, Managing Director of Investments at Echo Enterprises Fund, and Emiliano Cargiman, CEO and founder of Statologic. Thank you so much for being here with us. Now, I'd like to start by yielding the floor to Emiliano, who, as I said, is the founder and CEO of Statologic, a startup that is leading a global revolution in the field of satellite imagery data and solutions. We are going to start with Emiliano because he has a very important satellite launch to lead very shortly, and we definitely don't want to get in the way of that. So Emiliano, could you please share with us, how does a company like Statologic helps address climate change challenges?
Yes, thank you, Carolina. Thank you for the invitation, and it's a great pleasure to be here and to come with the support of IDB throughout this year. So working together with the IDB has been an amazing experience, the IDB Lab in particular. So in Statologic, what we're doing, as Carolina said, is we're putting satellites to capture high-resolution imagery of the planet. And this imagery can have different uses. We've launched 21 satellites so far, and in a few minutes, we will launch 4 more satellites. And we're building the capacity to monitor the world essentially in real time. When I started the company with the insight that humanity doesn't have a resource availability problem in the short term. We seem to have enough arable land and enough sunlight to give everyone a good standard of living, but we clearly have a resource allocation problem, a resource distribution problem. How we're making decisions about trade-offs between food, energy, and water supplies, or how we deal with the consequences of climate change. These things require a steady global source of detailed data that we can distribute to practitioners in the field at the right price point for them to make better decisions. And that source of data didn't exist, so we went out to build it. And the way we're doing it is by putting a bunch of satellites around the Earth to really capture data and be able to deliver daily information on basic variables like, ocean level, temperatures and acidity, fractures in polar ice caps, global temperature, natural disasters, and water distribution, amongst others. Now, we have many different customers for this technology in the commercial and government markets. With governments in particular, we're working very closely to use these capacities to help navigate the trade-offs between these big problem areas. Some of the examples of the things that we can do today and will be in a position to do even at a better or a faster pace in the future are things like early detection of oil spills that we're currently doing, early detection of illegal mining and illegal deforestation, monitoring of water humidity levels, monitoring carbon capture in forests, direct monitoring of carbon capture using hyperspectral sensors, monitoring soil erosion, pest detection. So these are some of the few applications that we already have, and we are our primary customers today are governments around the world, in Latin America and around the world, that are interested in monitoring the situation and finding ways to negotiate this trade-off satisfactorily.
That's amazing, Emiliano. I know you're on a tight schedule and that you have to leave for the launch, but I don't want to, and we don't want to get in the way of that. I just wanted to thank you for making time to participate in this panel. It is really inspiring to see a company like Statologic coming from the region and having really this impact on so many areas of development for the region. And again, thank you so much for joining us, and I wish you all the best for the launch.
Thank you, appreciate it, and sorry I have to leave early. Have a great day.
Thank you. I would like now to pivot to you, Douglas. Douglas, you are a true pioneer, and you are also revolutionizing now the market of the value of nature. Intrinsic Value Exchange, or IVE, mission is to convert natural capital into financial capital to fund conservation, compensate natural asset owners, and power a transition to sustainable economy. Can you please tell us a little bit more about your work at IVE?
Sure, and thank the IDB, for generous support of a somewhat complex and difficult concept, and we really couldn't have made the progress that we made without the support of the IDB. What we're doing is fundamentally looking at the market failure that brought us externalities, positive and negative, and that what we kind of look at as the original sin of leaving nature largely out of the economic system. So we think about it in terms of what we can extract traditionally in the economic terms, forestry, mining, development, agriculture. And we didn't think we needed to include all of the values that nature produces on an ongoing basis. And this has led us to two really critical shortfalls. One, on the negative side, we are not pricing properly land use or the way we produce goods and services. And then secondarily, those owners of natural capital, those owners of tropical rainforests or wetlands or other marine systems are not properly compensated. So what we've had to rely on for a long period of time was policy solutions. And that is really taxes, regulation, and most recently, kind of artificial markets like carbon. And these are attempts to kind of fix the fundamental problem and to put some value of nature and to an extent human and social capital back into the system where we've really factored only for financial performance. And so our approach has been to look at a financial instrument and a market trading system so that we could pioneer a new form of corporation whose primary mission is to manage and grow natural assets, convert that natural assets value, whether it's monetized today or in the future, into financial capital through an IPO so that we can provide capital and, very importantly, the price signaling necessary for us to rebalance the economy. And to give you an idea of the magnitude of this, the natural GDP is maybe 1.5 to 2 times our industrial GDP. And that's left completely off the table. And the assets that produce those goods and services that make life on Earth possible and enjoyable are worth an estimated $3,000 to maybe $4,000 trillion. So if we can even take a small fraction of that and move it into the mainstream of the economy, then the entrepreneurs and companies and governments that want to do the right things will have the economic incentive and the capital to do so at scale in the capital markets.
Thank you so much, Douglas. It's so interesting. Maybe a follow-up question to that is, I do imagine this is also very complex and new to many in the audience, including myself. Can you tell us how exactly you are able to do this? So how you are able to monetize the value of nature?
Sure. So, I'll start off with one comment. And, we often think of finance as like a natural law, like physics and biology and chemistry, when in fact it's an agreement to agree. And that can be easy to change and very powerful, but it also can be very hard to change. So what we did was we said, if you think about nature as a productive element, like the plant and equipment is the geomorphology, and all life is the workforce, works 24/7 to produce a good and service that we know has value. So we said, if that can be captured within an equity-like structure, so a company can obtain the rights to this production of ecosystem services, then that's its primary asset value, then it can be actively managed. And an important thing is we said we need to expand the definition of economic performance. And we created an accounting framework that said, if you monetize your revenue stream, carbon credits, ecotourism, production of agricultural products, great. That's reported under traditional accounting. But we created a system of what we call the statements of ecological performance to capture what nature produces for us. So think of the income statement being the equivalent of the flows of ecosystem services. The balance sheet is the asset value of the underlying nature. And then we have qualitative statements like, the biodiversity and the health of an ecosystem. And those together would inform. And importantly, we want investors to rely on both of those pieces of information to drive the value of the equity and make that investment. So rather than just rely on current and future cash flows, which is a model that we use for several hundred years, we're saying to fit what we need today, we need to be able to include all the values of nature and everything that it produces. And that's what investors should rely on.
Thank you. So interesting, Douglas. We can definitely say that you're leading one of the most pioneering initiatives in this area for sure. And I hope to hear more about this new asset class in the near future. Thank you so much. I would like now to yield the floor to Julia. Julia, Eco Enterprises Fund has a vast experience and track record in investing in innovative, sustainable businesses. You have launched 3 funds already, and you're about to launch a 4th one very soon, right? Given this extensive experience, can you tell us what are the financial instruments that you've seen have had more traction with bioeconomy businesses?
Yes. Well, thank you for having me on the panel. It's always great to see sort of looking at our track record and what we've tested over the year, and then sort of sharing the space with so many groups that are continuing to innovate sort of the same way we do every time we go back out there to launch a new fund, a new product. Because really that has been the track record, and it also relates to the instruments that we've seen evolve over the course of time in the market. When we started out, we really came from an NGO background at a time when impact investing as a concept didn't really exist. And when our Fund 1 was really an experiment driven by the desire to bring conservation activities and environmental impact closer to the private sector and bring people together to really support each other in achieving a common goal. So at the beginning, we invested in really pioneering, very early stage startup businesses. And over time, as our funds grew, obviously they grew with a growing market, in a market where there are more sustainable products, more demand for sustainable product, but also more entrepreneurs with a sustainability vision and really with a desire to build all around sustainable business, both socially, economically, and environmentally. And what we've tried over the course of time really has been to evolve with these entrepreneurs and to provide them the finance instruments that they needed at any given time to really make that work. And we've always tried to sort of identify the gaps in their local market environments that we could help to close to a certain extent. So what instruments have worked? I would say there really isn't the one financing instrument that is sort of the one-size-fits-all solution, given that we have so many diverse business models out there from different sectors. Eco Enterprises Fund invests in sustainable agriculture and agroforestry systems and ecotourism and aquaculture, in emerging sectors like renewable energies that focus on small-scale rural communities. So obviously all these have very different necessities. So what I would say what has worked and what continues to work is really to try to partner with companies to really identify one by one and really on a case-by-case basis what is the specific situation a company is in, what is the specific gap in their local environment, in their financial and capital market, and then really try to structure around that. So for example, as a fund, we invest a lot of very flexible tailored debt instruments. We do quasi-equity instruments. We've had traditional equity instruments. But where we really always part from is that in-depth analysis and conversation with the entrepreneurs to really understand like that specific model, what does it need to succeed? And then we try to partner with the companies as if we were shareholders, even though we might just provide a small debt amount to make the next expansion step or investment. And that is also what we've seen, what has brought sort of the biggest value to our companies is that they feel we really have a hands-on relationship, that they can really sparring with us and sort of have our sort of external capacities that they can lean on a little bit as they grow, which goes far beyond just providing a certain financial instrument to close a financing gap. And I think that continues to hold very true. I think we've seen positive signs that local financial markets are also catching up and offering more attractive terms to local businesses. But we still have a lot of amazing projects and entrepreneurs that sort of fall through the system because they are not traditional enough or commercial enough at a certain stage, or maybe it's the approach is too innovative for a local bank to really want to take the plunge. And that is where we try to come in and or we try to sort of join them for a couple of years and then leave them in a place where then other more commercial investors come in and gladly take over.
Wonderful, wonderful, Julia. Thank you. And maybe to help us illustrate a little bit about Eco Enterprises Fund, could you give us a concrete example of your portfolio so that we can have a sense of the type of companies you're supporting?
I was going forth and back because we have so many beautiful stories that we've, like, companies that we've worked with over the years. But maybe, as I already mentioned, that we as a fund have had a trajectory of growth over 20 years now. Maybe one of the greatest examples that I could share maybe is also a company that we started to work with in Fund 1, and that we actually met when the founder was starting out with a small startup business, which is Sambason. So Sambason is a Brazilian-based operation, US founders, but the whole operation, the whole supply chain is in Brazil, in the Amazon. And Sambason set out sort of like one of many startup ideas, with a crazy idea during a trip that the founders took, and saying, we need to bring this amazing product, which is acai, which was well known in Brazil at the time, but completely unheard of in the United States. And they said, well, we need to bring this home with us and make something exciting with it, that actually helps people locally to generate an income and to really grow and really sort of help to develop a sustainable economy deep in the Amazon, where a lot of the acai is harvested and continues to be harvested to date. So Fund 1 invested in Sambason when it was a startup. It was debt financing, not even that long-term, relatively small amount that helped them to build the first processing plant locally. And then we continued sort of to do follow-on investment as the company grow, to support the expansion, and to really help them to set up a global supply chain to what it is today. And Sambason has grown into a multi-million-dollar company. It continues to be one of the pioneering companies in acai in the United States and in many other countries around the world to date. And the beautiful part about it is that they continue to be as invested in the sustainability of the supply chain as on day one. So they continue to work with local communities in the Amazon. They continue to work with wild harvested acai that they certify organic and fair trade. So they have a very strong relationship with communities on the ground, with NGOs on the ground. And even though the company reached a certain level where commercial investors started to get curious, they received a lot of private equity funding from the United States. They continued sort of to come back to us to seek additional financing. And at some point when we said, well, we're actually getting close to the point where you have outgrown the necessity to work with us, because you are on the radar of other investors. And what they said really resonated with us, because they said, well, we want to make sure to continue to have an investor on board that doesn't support us only for the commercial success we have, but really for the mission that we started out with. And Sambason is also a great example in terms of the instruments that we've invested, because we've literally tried, I would say, the full breadth of financial instruments that we can offer with a company, from a more traditional debt to long-term debt financing, to a straightforward equity financing, to a quasi-equity financing with a pre-negotiated sort of exit path, depending on the certain sort of expansion stage of the company, the current dynamics of the other investors around the table, the other funds participating. And we continue to be extremely proud to be part of that growth story, and to still be able to go back and find new projects to work on with the company in Brazil along the supply chain, and to find sort of additional possibilities, not only to support the company financially, but really to ensure that we continue to boost the impact on the ground.
Thank you so much, Julia. And I know it must have been really difficult to choose only one to talk about, but it's definitely a really beautiful example, and also an example of how you are able as a fund to be flexible and support the entrepreneur's journey with whatever needs they have at a certain period of time, right? So I think that's very, very valuable as well. Thank you so much. I would like now to pivot to Francisco Jardins, who also finances innovative business models and innovation, especially in the area of agriculture and food production. He's the co-founder and managing partner of SP Ventures, a VC that's focused on ag and food tech investments in the region. Francisco, welcome, and can you please tell us how important is the agricultural sector to promote a sustainable and green recovery in the region?
Hi, Carol. Thank you for the invitation. It's an honor to be here, such renowned guests and fellow panelists. So we don't really see a way to discuss climate change and a sustainable return and revival without tackling agriculture. In rough estimates, approximately 17%, and this varies from region to region and from agriculture to agriculture, but 17% of global greenhouse gas emissions come from agriculture directly, right? Food production and food processing emits greenhouse gases in every step of the way, in every single process. And if you look at land use and land degradation, you have another 7% approximately indirectly. So we're talking about almost a quarter of greenhouse gas emissions can be worked and can be tackled from the agriculture side. Now, besides direct greenhouse gas emissions, there are a few other things we have to take into consideration when we talk about agriculture and sustainability. First, the smashing majority of the chemicals of global concern are used in agriculture. So when you talk about ag tech and efficiency and using less chemical fertilizers or chemicals for crop protection, you also have a pretty direct impact. Another point is the efficient use of water resources. More than 70% of freshwater use in the world is used in agriculture. So it's very difficult to talk about water efficiency and water preservation without talking about agriculture. I mean, the rest is fairly marginal. And last but not least, when we talk about the importance of forests and natural ecosystems to combating climate change and reestablishing temperatures, we have to remember when we increase productivity in agriculture, we are indirectly reducing the pressure for the expansion of the agriculture frontier and consequently taking down one of the primary drivers of deforestation. So, I mean, agriculture as a context is very, very important. And then on the post-mitigation and already on the adaptation side of climate change, we have to remember, I mean, we need to produce food. We need to guarantee food security for the planet. And the primary risk variable for farming is climate. So when we talk about climate change, we're also talking about food security risk, which is a very important component. So technology and many of these other drivers of ag tech or a climate resilient agriculture that they after. So these are some of the reasons, some of the aspects.
I think we might be having a little technical issue with Francisco. Just bear with us. A little moment.
So with that in mind, I think those are some of the key reasons why agriculture is fundamental when discussing a sustainable return and combating climate change.
Thank you so much, Francisco. And definitely, without a doubt, the role of agriculture is key to this whole conversation, right? We cannot talk about tackling climate change without rethinking about our agricultural sector and our productive model. Having that in mind, can you tell us, Francisco, just a little bit more about SP Ventures, what you guys do, about the fund, and also could you share us a concrete example of a portfolio company that are tackling these issues we've been discussing?
For sure, Carolina. So SP Ventures is a venture capital firm based out of São Paulo, Brazil. We invest throughout Latin America, and we are one of the few sector-specific venture firms. And our sector is the sector that represents a quarter of Brazilian GDP and is also very relevant in most of the other economies in the region, which is agribusiness, which includes not only agriculture, but livestock inside the farm gates and all the way downstream. And we work very similar to other venture firms, very focused on fantastic, brilliant entrepreneurs, purpose-driven, attacking some of the biggest challenges of humanity. And it's in agriculture and climate change where we see perhaps the most pressing challenges currently going on. Now, to discuss some portfolio cases in the sustainability and climate changes is always a tough choice to make. We see some of the ag tech companies that are being invested as fundamental to be able to metrify and measure carbon and soil. And if you can't measure, you can't improve. So that's definitely one of the segments. Digital farming as a whole makes farming more efficient in the use of inputs. So chemical fertilizers, chemicals for crop protection. So these are also some of the core investment pieces that we've been doing. And biotechnology, of course, be it biological substituting chemicals or be it improved CRISPR advanced gene editing seeds that allow you to produce more with less inputs in more difficult land, and also preparing for the certification. Now, that said, the company that I would like to point out in the case, it's Thrive Finance. It's an ag fintech company, and it's really been leading the pack in Latin America in the green bond for farming issuing. They've been able to use technology to not only optimize, but also price and bring more security to investors that they are backing truly green, good practices farmers. And we believe that financing that comes with strings attached, and specifically strings attached of guaranteeing that produce comes from a non-deforested sector, that it was produced in the best soil practicing of farmers, and that it was in a way that conduces good carbon practices, we feel is one of the best incentive-based measures to be able to leverage climate-friendly agriculture. So ag fintech is the sector that I'd like to point out. The specific company, which was the company that did the first green ag bonds backed by the Climate Bonds Initiative, was Thrive. It's definitely one of the companies that we're seeing cause the most direct impact in this sustainable change for farming.
Thank you so much, Francisco. Really, really interesting. Before I come back to Julia and Francisco, I'm just gonna ask you to think about one more. I know it was hard to think about one, so since we have a little bit more time, I'm gonna ask you to feel free to think about another example. I know you guys have many examples, so I'll ask you to bring about another one. But before we do that, I would like to yield the floor to Douglas to ask him if he can tell us what are your thoughts about how do you see these examples and the innovation ecosystem and the startup ecosystem. How can entrepreneurs help support your mission of, as you said in the beginning, converting natural capital into financial capital to fund this green growth?
Yeah, I almost think it's the opposite way, that we're trying to make a platform to accelerate the ideas that you're heard today and hundreds of others that we've seen. We have found investors are absolutely thirsty for sustainable, true green projects at scale, and they have difficulty finding. We see entrepreneurs with fantastic ideas. Some of them, as was mentioned earlier, they may not be ready for commercialization, or the value. If we think about it, in a farm sector, we should be compensating farmers not only for production of commodity products, but also for the production of ecosystem services. So if we look at it from that perspective, we see technology being important. We have to measure things. We have to be able to say, are we getting better? Are we actually performing on these in a real level? We have to be able to find projects that are actually doing the right things. And so if we can direct capital flows to these things that are not just nibbling around the edges, but are getting at the core problems directly, and they're financeable and they give a return to investors, then the desirability of companies, we're working with a major food company right now. They set their agenda for regenerative practices, and they just don't have the financial capability in order to invest at scale to convert their supply chain. So in this scenario, what we're looking at is all these parties are going to come together. So finance just makes things move faster when it works, for good and bad. And so in this case, we're trying to drive it towards the building of a natural capital, human capital, and social capital.
Great. That's amazing, Douglas. And actually, to help you complement this statement, I would now like to pass the word and the floor to Julia and Francisco to tell us what other concrete examples, as Douglas said, of companies that are tackling these problems on the ground do you want to share with us?
Who should go first? Should I jump in? Well, maybe instead of just giving one example, I would like to maybe share two, sort of to contrast and show a little bit the spectrum that sort of we love to have in our portfolio, to really sort of have a mix of like all these different approaches that you can find on the ground. And also because I think it's important to see like how many different angles there are that you could sort of support to tackle some of the problems that we witness in the region and globally. And I think it's an important sort of to keep an open mind to try to accommodate as many of these as possible and sort of create that chain the Douglas man, from financing to the big ones to the small ones, but really sort of generate like an incentive for all of these entrepreneurs out there to continue to push for what they're doing. So, for example, in our portfolio right now, we have two companies which I find are beautiful contrasts. For example, here in Colombia, we work with a company that's called Ecoflora Cares, which is a relatively early stage company. We worked with Ecoflora Agro in our prior fund that developed biopesticides, all based on natural ingredients, sort of solutions for the agricultural sector. And then they started Ecoflora Cares, which is a natural colorant company, which is unique and interesting because actually in the global market to date, there has been sort of one ingredient for natural blue colorant. And when we talk about natural blue, that is important for our clothing, for food, for sweets, for cosmetics, for like all blue that you find out in the market. Either you have chemical components or you have to date one natural based solution. So ingredients companies across the world got really excited when Ecoflora Cares, like a startup out of Colombia, sort of showed up on the global panels and told about their development, which is based on a unique Amazonian ingredient that develops not only a beautiful blue, but actually a stable blue, something that fit for all different kinds of applications. And obviously for us, it was important that we already had a standing relationship with the management team behind it, because it's pretty early stage in comparison to what we usually invest in. But as we had the confidence sort of to work with that company, we were really, really happy to be able to support them in that new venture. And I think it's an amazing example, especially nowadays when we say, like really the economic value, like the commercial potential that we have in the Amazon that we are still discovering to date, but that could really, really become a big global operation at some point. Is so important to support. Because if you look at the numbers, today Ecoflora Cares works with between 40 and 50 suppliers. But if this goes to a global scale, they will be able to build such a powerful local supply chain involving so many rural communities in this, that this has really transformative character. And then sort of to go to the other spectrum, we work with a company out of Colombia that's also present in Peru and in Ecuador, which started 30 years ago, which is a family business grown for decades in a very traditional fruit exports. But their model from the get-go was not, to build big plantations and control everything, but they started out buying from small producers. And they have really grown into a multi-million-dollar business by expanding their smallholder supply chain. Today, work with over 500 small producers in Colombia, in Peru, and in Ecuador, really creating a market access that none of these producers would have on their own. And the heavy lifting that this company does is that they go into the field, that they provide the technical support, they come with their agronomists to ensure that not only best practices are implemented on the ground, but also that the producers really receive the support they need to be as profitable as they can, as productive as they can, to really make this a win-win situation. And this is a very traditional market compared to what Ecoflora does, but it really has a tremendous sort of impact on the ground, given that in Latin America, we do work with thousands and thousands of smallest producers that on their own wouldn't have the incentive, to seek certification, to change practices, but sort of with that connection to a global market. And then again, hopefully in some future global market where Douglas will come in with his exchange, there's an even stronger pull, and like bringing all these elements closer together really, I think is what really unleashes the potential of these agricultural supply chains that by definition today are global and not local anymore.
No, definitely no. And amazing examples and different types of businesses. So thank you for that, Julia. Francisco, what about you? What other example from the portfolio of SP of interest you want to mention?
Yeah, I wanted to get a hook from Julia here and talk about one of our portfolio companies as well that's been doing similar impact and also focused on the supply chain. We are investors, the first early investors in a company called Agrosmart here in Brazil. And it's a company that started out with a very specific purpose of attacking efficient water use in agriculture, irrigation technology, smart irrigation, using that data and connectivity to be able to forecast and intersect with weather forecasting and to optimize irrigation. And after basing their core fundamentals on irrigation and water, preservation of water, they started to move up the ladder. And what happened was companies that have a long supply chain of small farmers, Nestle with coffee growers, InBev with barley growers, etc., they started to notice that if they want a sustainable supply chain, that they can metrify, that they can prove and demonstrate that they're taking measures, and that supply chain is going to give them not only a stable and reliable supply, but also something that they can be assertive in saying that it's not causing damage to their total stakeholders. So Agrosmart understood this, and they used their technology to be able to close clients such as InBev, which then give them access to their supply chain. And what they started to do is they started to measure more and more aspects of the farming operation, such as soil humidity, such as precipitation, and several other characteristics of the farming operation, and give that data in real time to farmers to make their decisions. But they also use that data to classify the farmers as being good or unsustainable farmers, right? So you have finally a tool and an instrument that not only tells you how to be a sustainable farmer, but also validates that you're a sustainable farmer and allows you to go to the leader of a supply chain, such as InBev, such as Nestle or others, and be rewarded for it. Be rewarded for good behavior, not only being classified as a special supplier, but also getting paid additional premium for your product. So it's a win-win, and you can only do that with digital technologies that allow you to scale and democratize access to these kinds of farming practices. So it's another company that we've been very proud of. And also on the front, also mentioned by Julia, we invested in a company called Genica, which is a company that scales microbiologicals, microbes, for example, and uses those as substitutes for agrochemicals. So when we produced a large monocrop operation here in Brazil, and it became one of the largest soybean and grain producers in the world based on this, what happened is we had to take down the forest and we had to create several imbalances. And these imbalances are what allowed for pest populations to become major infestations. And what Genica does is it identifies which microbiological agents were abundant in the forest before we took it down, which kept the population of pests in control. And we reestablished that equilibrium of mass producing and mass delivering these microbiologics, right? So it's biotechnology using the lessons of nature, but with scale-up technology and scale-up business models to be able to reestablish a national equilibrium. So whether it's biotech or whether it's digital, there's a flood of new solutions and new technologies, increasing not only productivity, but also productivity of sustainability. And in farming, I don't know if my fellow panelists agree, but in farming, it's pretty possible for you to say an increase in productivity without that being a pretty correlated increase in sustainability as well, as it becomes a more efficient operation, not only minimizing food waste, but also using less inputs, water, chemical fertilizers, and other greenhouse gas and environmental damage causing substances.
Well, And I'm glad we asked this follow-up questions to you both, because so many examples, really, so many great examples of startups and entrepreneurs and businesses from the region that are really helping us to enable this green growth, right? To enable a different kind of growth and development in the region. So it's really glad to hear these examples. Before we close the panel, I would really like to ask you three just the last questions of how do you see that this market and that the innovation ecosystem of climate green tech companies is going to develop in the next 5 years? And I say next 5 years because 10 years is too much time, right? Technology advances so fast that in 2 years, 3 years, we have something that we couldn't imagine. So please give us your thoughts on what are the developments in this market that you expect to see in the following years. Who wants to start? I can point fingers.
I'll jump in. Go ahead, Francisco.
Okay.
No,
No, go ahead, Douglas. Go ahead.
sorry. So we've been out speaking to investors around the world, and the change, even in the last 6 months, of the intensity of interest around climate, regenerative agriculture, and really solving problems, and the role of finance to find these ideas is exploding. And by necessity, we are reminded daily of the problems, whether it be what we just went through and still are in, a pandemic, the pressures on climate. Here in the United States, we're having record temperatures months earlier, one of the worst fire seasons, and people are really paying attention. So I think you're right. This is not a 10-year time frame. It's what can we do next year and the next 5 years. And I think we have the beginnings of a consensus from a financial community, from policymakers, and I would say from corporations, that they have to move the needle much more quickly, and they're willing to do so. And consumers, they've come on board. They're leading. So I think that's a trend that's just going to accelerate. As we give them the tools to incorporate this into their daily lives, they will very quickly.
Great insights. Definitely, Douglas. Julia, Francisco?
Francisco, go ahead. You were ready to jump in.
Okay. First of all, I agree 100% of Douglas. The speed at which this is not only not being a niche, but becoming mainstream and then becoming obligatory, mandatory, basic fundamentals of investing is breathtaking. And 2020 was clearly the year where this exponential change became unavoidable, and things really changed. And then this year, when we felt the momentum was reaching a peak, I agree with Douglas as well. It was a very strong first semester. I remember last year when Bayer here in South America announced we're going to do a test for using carbon credits to finance inputs with 500 farmers. Everybody thought that was an absurdity. And now everybody's doing it, or everybody's trying to do it. So, I mean, these things and these practices really changed. And I think the biggest take home for all of us is watching the voluntary net emission pledges that companies are taking, the speed at which companies, and it's quickly becoming the first early adopters that did it were the pioneers. But now it just looks really bad if a large corporation doesn't do it and everybody's doing it. So that's going to give rise to a huge carbon credit market. And you're going to need all the technologies enabling that in scale, whether it's to metrify, whether it's to finance, whether it's tokenization to be able to distribute these carbon credits in a very efficient manner. So we're going to see all the four major technology platforms, in our belief, hitting the sustainability challenge. And by these four, I mean mobile, social, cloud, and crypto. All of these are going to provide some major opportunities and entrepreneurial activities in this fight against climate change. Julia.
hard to wrap that up because you said so many true things there. Maybe I want to highlight two. I think also the development of stronger local carbon credit markets has been a tremendous development. Because when I think back to investments that I structured not even 5 years ago, 2 or 3 years ago, they always talked about, but maybe an additional revenue stream could come from carbon credits at some point. But those were always very theoretical considerations. It was acknowledging the work that they did on the ground, but sort of the potential to really benefit from that and turn that into cash flows was very visionary, very far away still. So something that we as an investment fund, for example, never even included in our considerations. Today, it's a fact. At least in Colombia, for example, we have a very strong local market. And I think the next few years are going to see a lot more very important development steps in that sense. And the other side is the stronger monitoring and the greater capacities that we have today to really bring real life data to clients, to customers, to investors around the world. Versus 5 years ago, we were depending really on certification schemes to provide a certain level of comfort and trust building and tell customers and consumers on the other side of the world that this was a well-done product with social responsibility, with environmental sustainability. Nowadays, there are so many more components that we can add to that make it a lot harder for companies to not do it. And I think that is something that will continue to accelerate a lot. I think, for example, when we talk about blockchain, that is still something that is already broadly discussed everywhere. I believe to most people, it's still extremely vague what it really is all about. And I'm sure that in 2 or 3 years, it will be a standard, the same as with more satellites orbiting Earth, to bring Emiliano back in our sort of closing here. I think it will just be the more easily available information gets, the more standard it will be to use that on a day-to-day basis. And we, from an investment fund perspective, have seen that also in how we go about our investments, because maybe 5 to 10 years back, the focus of impact generation was really on the core business. So the direct operation of an entrepreneur. And today, this has really opened up and broadened to become a supply chain perspective. So today, we talk with a company, and right away, we take the whole supply chain into consideration. And so if we make a company largely responsible for practices also along the supply chain, and if they cannot directly influence it, we may hold them responsible to at least bring transparency to it, and via that transparency also enhance the responsibility of everybody involved in that supply chain. So I think with more technology, that will become easier, and that will become more of a standard requirement for everybody involved. And it will also become more of a pull from the market side to continue to support that across all the businesses that we work with, all the products that we consume.
Well, I love it. I love it. Thank you for inspiring us. Really, I feel re-energized and positive about the future and the challenge and opportunities that we have ahead of us. Unfortunately, we have to come to an end of this panel. I could definitely go on, continue the conversation for hours with you. But the good news is that there are other great panels following, so stay connected. I would like to thank each and every one of you. I think that this session has definitely shown us the importance and the power of innovation and the entrepreneurial ecosystem to spur the sustainable and green recovery for the region. The region needs innovations and new business models to do things differently, to transition out of this COVID crisis and the climate crisis and move faster towards building a better, a greener, and a more prosperous future for everyone in the region. We definitely have a big challenge ahead of us, but as I just said, also a great opportunity. We need to help untap all the potential that the innovation ecosystem has to offer. to help and seize this opportunity. And we need to do this together. Again, thank you so much, Francisco, Douglas, Julia, and Emiliano, who had to leave us at the beginning of the panel, for sharing so much with us. Thank you, everyone who joined us. I hope you enjoyed this conversation as much as I did. And I, again, encourage you to stay connected and enjoy the other sessions. Thank you so much.